is their financials. So, and specifically the thing that I look at is their cash flow statement. And you can see here that I've loaded Yahoo Finance, which is free and simple to use. Along the top here, you can click into the financials of most publicly traded companies, look at their cash flow statement, and just look at it on an annual basis. And the thing that I look at is essentially the total cash flow from operating activities. So what this line item shows is whether this company is generating money from its fundamental operating activities. So in Snapchat sense, we can what is the company actually doing? What is it doing to generate revenue? So the first thing that it's doing to generate revenue, or the main thing that it's doing, is selling ads on its app for users to see while they're using it. And the second thing that it's doing is selling a new product called Spectacles. So I've loaded here actually Snap Inc.'s investor relations site. So you can see that Snap describes itself as a camera company. We believe that reinventing the camera represents our greatest opportunity to improve the way people live and communicate, which is kind of doesn't mean anything. They repeat it here as well. I generally also just get like a little bit of a feel for the company, look at what recent events they've been a part of, look at kind of their most recent disclosures. So, and this is what I like to focus on: cash. So this Snapchat as a company is basically in this quarter losing $96 million in cash from its operating activities. So if you compare this to, if Snapchat were, instead of Snapchat, if it were, for example, like a coffee shop on a main street, this would mean that that coffee shop, as it exists, is losing $96 million of money every quarter. So that means that the amount of coffee that that coffee shop sells, let's say it's selling $100 million of coffee. So this means that if it's essentially generating, for example, $100 million of revenue from selling coffee. However, in order to sell $100 million worth of coffee, it is using $196 million of costs. So this basically, very quickly just shows me the current status of the company, which is that as of today, in this quarter, the ongoing business is basically losing money from its operating activities every quarter. And then what I like to do is just see how that has evolved kind of over time. So we can see here that Snapchat's operating activities are basically, the negative value looks like it's increasing pretty much every year. In 2018, they've improved the negative a little bit, but it's still losing $689 million of cash to run its business. So to use the coffee shop analogy again, what this means is that assume we have one coffee shop, it's losing $1 million it's just losing $1 million every year. Theoretically, we can have 100 coffee shops, which looks great. The business is growing as kind of an entity. However, we're losing more and more money every year by growing that business. And this is how kind of a good analogy that I would use for Snapchat. And we can see here that Snapchat IPO'd at about $22 a share, traded down to like 20% of that, about 20% of that within a year and a half. And now it's traded up again a lot. So probably you can get a sense, but my overall view of this business as kind of a cash flow business is relatively negative. The valuation is based primarily on kind of the future potential for the negative cash flow to turn positive by selling more ads or selling more physical products like the spectacles. So the other thing that I would do is just read a little bit about the stock on something like Seeking Alpha, and just get some analysis and see kind of where people stand. So why investors should avoid Snap after 200% gain. Investment thesis, growth concerns, valuation. That's, yeah, so you can see here that compared to comparable companies, Snap also seems to be overvalued. Yeah, on an EBITDA basis, it has a negative EBITDA, but it's minus 77 times EBITDA. Whereas things like Facebook and Twitter are valued at 12 to 22 times EBITDA. And companies operating at negative free cash flows. Snap is soared 200% this year, but its problems are just beginning. Trouble attracting advertisers. So to grow those loss-making revenues, I need to register to continue reading this, but you kind of get the idea. And now then the question is, how would I position myself around this company? So given that I'm negative on the company, I would most likely buy put options on this. And one tool that I like to use to calculate kind of the potential return on options is options profit calculator. So, and actually I prepared an Excel here just with a little bit of additional information. So I've just pasted in the description about what the company is doing, what currency it's traded in, the current market cap, what exchange it's traded on, the New York Stock Exchange, in the 52-week range, which is pretty big, and then whether options are traded or not. In terms of reporting, I always find this interesting, especially when trading options. So I know that in 2018, Snapchat reported its earnings on the 1st of May 2018, 7th of August 2018, 25th of October 18, and 5th of February 2019. They've already reported the first 2 quarters, and I know that just based on averaging this out, that they report their next quarter about every 350 days. So the Q3 numbers for this year are most likely to come out around the 13th of October, and the Q4 numbers around the 24th of January. Here are also just some nice links. For example, they had a conference with Credit Suisse in March 2018. You can kind of look at and just listen to. So, and then why are the reporting dates important? So the reporting dates are important because I want to basically short the stock through put options. So I know that these are all the options that are available. And I know that the company is most likely to report, and reporting usually are a catalyst for the stock price to move because new numbers about the company have come out. So for the full year 2019, the company is most likely to move on the 24th of January, 2020. So if I'm assuming, or the market assumes that it's actually around the 17th of Jan, because that's when the options are available. But what I could do is, for example, the company is currently trading at almost $17. I could buy put options at $1.61. And theoretically, if I just move this to 5, you can see here kind of the time and the potential return. So in theory, if the stock price drops again, this is loaded now. So you can just watch this video. This is the guy on the right is basically like head of some kind of commercial development for the company, and they're asking some questions about Snapchat just to get a little bit more of a view of what's going on. But if we assume, so November 18, the stock price of Snapchat was $5. So if we assume that the stock price, the company does poorly, the market realizes that it is just a cash burning machine, maybe there's a recession, it gets a little bit more difficult to raise additional money. And I buy put options now that mature beginning of January 2020, and the stock price drops back down to $5. There's a room to make a 583% return, or basically 6 times your money, or 6.8 times your money. So which means that if I put $10,000 into buying these put options, I end up with $68,000. Now, if the market essentially stays, in my view, irrational and continues valuing the company highly, because I've positioned myself on the downside of the company, my purchase price for the options will be wiped out. So I have actually bought put options on this company back when the options seem to have gotten a lot cheaper since I bought them. They are now trading at $1.61. They used to be trading at $1.93. And yeah, that's how I position myself. So I hope this video was useful and informative to understand how to buy put options on Snapchat.